Hello, guys. Welcome back to Stacking Stocks, and thanks for joining us today. Today, we'll discuss a popular stock that could become one of the fastest growing companies in the next 4 years. Will NIO become the new Tesla? Let's find out more about NIO stock. When it comes to determining a company's full outlook, it takes more than just sales growth. But things couldn't get any better for growth stocks. Before we get into specific details, let's look at the events in favor of growth stocks. We're talking about historically low lending rates, ongoing quantitative easing measures from the Federal Reserve, and a free spending Congress that has rolled out the red carpet for fast-growing companies. Access to cheap capital is abundant, and growth stocks have deployed their cash to hire, innovate, and even acquire other businesses. With all this happening, where do we expect growth stocks to be over the next couple of years? We expect several ultra-popular growth stocks to hit the ground with blockbuster sales. NIO stock is one such growth stock that we believe will deliver aggregate sales increases ranging from 559% to 809% by 2024. We expect NIO to put the pedal to the metal in terms of growth. We believe the electric vehicle manufacturer will lay down some serious rubber for a sales perspective. NIO reported $2.55 billion in sales last year. That's quite impressive, don't you think so? And we project the company to reach nearly $16.9 billion in full revenue by 2024. But can NIO really achieve such a remarkable feat? Well, we've seen the company displaying amazing figures in past sales. Let's analyze the unfolding events and see what we should expect from NIO. The electric vehicle manufacturer has always placed itself in the right places at the right time more than once. This has made it popular among many consumers. For example, the battle against climate change has driven businesses and consumers to act. Don't you love an entrepreneur who thinks about the impact companies have on the environment? Most people often appreciate the efforts business persons make to care for the environment. As much as investors and entrepreneurs aim to gain profits, further protecting the environment is a commendable gesture. We guess that's why many investors look at NIO as the new Tesla. There are more similarities to the behemoth electric car maker. Do you remember when Tesla halted Bitcoin payments because of environmental concerns? NIO is also trying to push for change when it comes to caring for the environment by battling against climate change. NIO is surely finding itself in the right places, and there's so much more about the company. We're witnessing more logical shifts from NIO, such as the push towards the electrification of consumer vehicles and enterprise fleets. To say the least, this is a multi-decade replacement cycle providing ample opportunity for multiple EV makers to shine. We've just talked about NIO finding itself in the right place at the right time. Do you know the location of NIO's headquarters? It's headquartered in China, which is the largest auto market in the world. What better place to have an electric vehicle making company than the world's largest auto market? We've observed that NIO is pushing itself into strategic spaces. The company has innate determination to improve sales. Well, it seems like we should expect quite a remarkable performance from NIO stock. At the moment, there's nothing more urgent for NIO than expanding its production capacity. Everyone knows what this means. More products mean more sales. More sales transitions to more revenue. However, capacity in the entire industry is facing challenges due to supply chain issues concerning the chips used in new automobile production. Here's an insight into the effects of the supply issues on the production of electric vehicles. NIO delivered 5,880 vehicles last month, but had delivered close to 8,000 vehicles in each of the previous months leading to August. Does this mean that NIO faces a major hindrance to production expansion? We've observed that once these supply issues ease, NIO will push for an annual delivery run rate of 150,000 electric vehicles. It looks like the supply chain issues are impeding NIO's production expansion. We've also noticed that for NIO to get to Tesla's level, the company has to overcome several challenges. For example, NIO is facing far stiffer competition than Tesla ever did. We're talking about the 14 other electric vehicle manufacturers based in China. The company needs more than wishful thinking in order to dominate the EV space. Did you know that the EV space grows 25% per year? Moreover, winners generate 1,000% type returns for shrewd investors. If you're smart enough, you can become wealthy just by investing in the EV space, and NIO stock has so much potential. For NIO to win, it'll take more than just decent reviews, not to mention that predicting the ever-changing Chinese taste is quite difficult. The Chinese car market is flooded with numerous brands, making it difficult for buyers to choose. Some car brands face a sharp decline and eventually being thrown out of business. Investors need to pick companies with the highest chances of success. NIO seems to fit quite well in that category. But NIO has to make a Herculean effort to impress consumers. Remember, Tesla didn't just suddenly become successful. We've already established that success in the crowded auto industry is challenging enough. Elon Musk pushed Tesla to success through the creation of a desirable car and fundraising. NIO has to match Tesla's quality products to get to the same level. Even Rome wasn't built in a single day. Have a look at this situation. The world suddenly has to steer clear of Audis, BMWs, and Teslas in favor of a better, cheaper, faster, and more desirable Chinese import. And all this includes American and European consumers. That's what it'll take for NIO to gain worldwide popularity and become the next Tesla. It's not even about dominating the Chinese car market, because becoming the next Tesla means that NIO will dominate the global EV industry. But that shouldn't stop any young and hungry individual investor from getting a piece of NIO stock. In a nutshell, NIO and Tesla are two of the most popular stocks globally from the electric vehicle manufacturing industry. As much as NIO still has a long way to go before getting to Tesla's level, the stock has a lot of long-term potential as the company is a core player in the long-term growth of the electric vehicle market. The Chinese electric vehicle industry is also up for grabs. Tesla hasn't quite been successful in that space. If NIO can step up its production and increase sales, we'll witness a not-so-surprising takeover of the Chinese electric vehicle market. Chinese consumers have deemed NIO's products luxurious, stylish, and packed with new technology, but not extravagant. At some point, NIO was referred to as the Tesla of China. That has since become cliché, but the point is that even consumers think that NIO has that potential. NIO wins many new customers by word of mouth, just as Tesla does in the United States. As with Tesla, a lot of that future growth is already baked into NIO's stock price. We think NIO looks like the best of the upstart Chinese electric vehicle makers, and there's a good chance that it will thrive and grow and that investors will be rewarded over time. But they should also be prepared for the volatility along the way. Do you know what's equally exciting? We see innovation on all fronts of NIO, from the introduction of a new vehicle each year to rolling out a battery-as-a-service subscription program last year. The program is set to reduce the upfront cost of NIO's EVs in exchange for consumers to buy into a fee-based monthly program that will allow them to swap out or upgrade their batteries in the future. Effectively, NIO is exchanging some near-term sales for steadier long-term cash flow, higher margins, and improved customer loyalty. We've said it already, NIO has so much long-term potential, and the sales projections are achievable. Will NIO become the next Tesla? Consumers already see it as the Tesla of China. The company should solve its supply chain issues and meet investors' expectations. Well, this is yet to be seen, but we'll keenly watch the Chinese EV space. Anyway, that's what we have for you today. Once again, thank you for tuning in to Stacking Stocks. Don't forget to like, share, and subscribe. Until next time.